We'd like to thank JPMorgan Chase for their support to make this podcast happen. The views and opinions expressed in the podcast and the guests on the podcasts do not necessarily reflect the views and opinions of JPMorgan Chase & Company or its affiliates. I'd like to welcome you to Commonwealth's Emerging Tech and Ideas podcast, a show on how emerging technology is impacting people living on low and moderate incomes. I'm Tim Flacke, Executive Director of Commonwealth and host of today's podcast. In each episode, we'll introduce you to a financial services leader who's innovating and thinking deeply on this topic. Today's guest is Ben Maxim, the Chief Digital Strategy and Innovation Officer at Michigan State University Federal Credit Union, MSUFCU. Ben is also Chief Operating Officer at Reseda Group, which is a subsidiary of MSUFCU that serves really the entire credit union industry. MSUFCU has been serving its members for more than 80 years for technology that represents a journey from manual bookkeeping to today's digital landscape, and now includes AI, as we'll hear about and talk more about shortly. I'm just really thrilled, Ben, to sit down with you today and talk about your credit union, your work at Reseda, and how you serve more than 330,000 members, and really the role that technology is playing in the future of credit unions and, more broadly, consumer finance. So welcome.
Thank you. Thanks for having me on, Tim.
Yeah, really glad that you're able to take the time. So thanks again for joining us. I'd like to start by just setting the stage for our listeners. In your role at the credit union, I understand that you and your team manages services that touch really a huge range of members through a wide range of life stages, from students or young people getting their very first accounts to employees who are approaching retirement and probably everything in between. As it relates to technology in that broad mandate of serving such a wide range of members, what are you excited about with regard to that diverse membership, and what do you see as likely to shape the future of the way you serve that population?
Absolutely. No, I think it's interesting. We do have, we have youth accounts, we have parents opening accounts for their infants as they're born, all the way to people who are preparing for retirement, retired for years, been members of the credit union for 50, 60 years, whether they're affiliated with the university or came in another way. It's been interesting to figure out, and that older generation is becoming more tech savvy, so that does make it easier. But we still have a lot of things that we do provide, and they may, depending on demographics or comfort, certain groups or demographics lean more towards a digital use case or a call center or want to come talk to us in person. And we're really figuring out how to leverage technology in all those spaces to make the experience better. Not always directly for the member coming in to interact with us. Sometimes it's actually helping the employee in those, in-person interactions that may not have a digital component for the member interface, but as they're talking to our employees, there's a lot that happens that we can help them. AI can prompt them, they can get them better answers, to get more consistent answers. They don't have to learn this giant manual from the day one and remember it for the next 10 years. They can find out stuff. We change things and procedures and policies every day to kind of keep up with compliance, different needs. We're able to help support the employees that way. It's also really cool, and what's kind of shaping what we're doing now is how do we figure out, how do we leverage and retain members? It's really hard to bring them in, and once you have them, how do you keep them? And really the great way to do that is through personalization. And a lot of the fintech partnerships that we've cultivated and a lot of the technology that we've built have kind of been in the enablement of, making it easier for them to do something with their money. I think the other thing that's kind of changed in the experience people have had with their money over the last probably 10 years, or maybe even 20 years, is as generations would come through the relationship with a financial institution, they get a credit card, they maybe start with a checking account, they get a credit card, then it's time to buy a car, then they buy a house, and all that happens before they turn 30. And then there's been lots of touch points and different products, and some of that relationship builds and grows in that time. We were seeing, with the different financial crises that have happened over the last 15 years, there's delays in all those different opportunities for the generations coming through. So we're trying to build more engaging solutions to help people understand their money, give them more reasons to come and interact with us digitally. So there are things that are that really kind of help tell them how the money is moving in and out of their account that we're working on. There are things that are helping them save money, helping them have more spending power. different fintech offerings that are, not direct financial products, but they are things that tell you something about your account. And these are a lot of opportunities that are just out in the app store. They could interact separately, but by bringing them into our ecosystem, they're interacting with us, they're interacting with our brand, they're seeing it all in one place. And as they're ready to move through their different life stages, we hopefully have a new set of offerings for them, kind of in your own quasi app store, if you will, through the kind of curated through the bank versus being curated by Apple or Google or whoever you're using for your smartphone provider.
Oh, man, there's so much there. I want to ask you 4 or 5 follow-up questions, but
Sure.
I'll just, one, I think so often it's tempting to think about customer-facing technologies and
Mhm.
internal, maybe even back office technologies. But if I heard you right, there's this middle category of the way that technology is supporting frontline staff and employees who
Absolutely.
realistically are both customers and members of the community and also employees. And I think that gets overlooked sometimes in sort of the potential of technology to create more financial security and more financial health. And when we imagine what it's going to take to deploy that technology successfully. And I'm just curious if there's anything we can learn from you about how you all design for that frontline staff person who is both a provider, but also, in some ways may have more in common with customers than with somebody running the IT architecture in headquarters. Any thoughts on that?
No, yeah, a few things, a few points to touch on here. So one thing we like to do, we do realize that they're probably closest to the experience, both from what they hear from feedback-wise from members and also the opportunity to teach members about technology. So as we go through our process, rolling something out, testing out new opportunities in different, fintech partnerships or things we're creating ourselves, we involve them in the process. We give them an opportunity to try it before we send it out to all our members. And that way they feel comfortable. Early on when we started our innovation lab about 4 years ago, one of the first pilots I did, we thought, oh, everyone will just contact the innovation department because we put this email, to email address specific to innovation to come contact if you had issues. Well, people went to their normal channels. They came into the branch. They called the call center. They said, "Hey, what is this?" And then they had a problem. They were going to everyone, and the employees were in a weird situation where they didn't know how to answer the questions. So we didn't empower them to be able to have the conversation they wanted to have, or and they feel lost when they don't know and they kind of feel caught off guard. So we learned from that moment that we do need to empower the employees, give them the opportunity to try it, and then if they've tried it and believe in it, they're going to sell it. You don't have to teach them to sell it. It's happening anyway. It's like, hey, I tried this thing. This is what I do, and they're a much better advocate for any technology you're rolling out than you ever could figure out a communication plan, pay for marketing, PR, whatever. Not happening. If you can get those frontline employees excited about something, it's going to really help them translate how a actual member would use it as well. And then we also start to see, we have a thought of what the technology should do, but how are people actually going to use it, often changes when it actually gets in the hand of the, consumer user member. And we really get to start to see what does that look like. And they may use it a different way than we originally thought. And that's all good. That's how innovation and, innovation works across the world. So, there's also a lot we've done kind of that empowerment side to make their job easier. During the pandemic, a lot of us got to come home and, work from home and hang out with our kids and dogs and family and cats and whoever else was at your house. Those frontline people were overworked. One of the first things we did during that time was to create a internal chatbot. So we had an external chatbot to kind of handle requests coming into members. So we created an internal chatbot that made it easier for our employees to find the information they're looking for. We saw hold times go down. We were able to redeploy those employees who are working in those kind of employee focused helplines to actually help members, which also helped alleviate, some of the FTE crunch that happened as people were either leaving or not able to continue, or, again, it was a crazy time when people may or may not be able to work based on their health status at the moment. So we were able to kind of help get the frontline staff through, that time by giving them some solutions like that.
So well said. And I just, what I hear so clearly, which I think has echoes of other industries, is that if you want to deliver a fantastic experience for your customers, or maybe even to go so far as to say, if you want your customers to experience financial security, financial wealth, financial well-being, you just really have to start with your own workforce. And I think of the parallels in healthcare. When healthcare workers work in really difficult circumstances, it's hard for them to deliver good care. Or teachers, it's hard to be a good educator if you don't feel well grounded in the subject that you're teaching. And so that I want to use that as a segue to talk more broadly about the workplace. Obviously, a credit union, a financial service firm is one kind of workplace. But we do a lot of work here at Commonwealth on how the workplace is a really powerful channel, and more than just a channel, but really an ecosystem to deliver financial services and products and help people achieve those financial outcomes that we want for them. And I am curious, credit unions have a long history, many of them, of having fields of membership that are employer-based. We've just talked about your credit union as an employer. What are your thoughts about the role of the workplace and employers in trying to achieve financial outcomes, especially for underserved households with living on low and moderate incomes?
Absolutely. I think there's a great opportunity. I think there is an opportunity to maybe augment the financial services industry as well, where maybe people are shut out from traditional modeling to give loans, to do, there's some fintechs that have sprung up to do more payroll-based cash flow, so you can avoid going to a payday lender. They can work with your employer and say, hey, we know you're going to get $1,000 next Friday. You need $400 to cover a dental expense or medical expense today. Hey, we can do that at a low cost, or even as an employer, you can make a choice to not charge anything for that. And having these relationships, with a credit union, we have 20,000 business members who, a lot of them are very small businesses, maybe one or two employees, or maybe a sole proprietor. But we do have some significant employers as well, like the university, where we've crafted special loans for their employees, special products. Not an underserved community, but there are a lot of professors or staff at the university that only get paid 9 months of the year typically. And then depending on what they do in the summer, they may not have planned ahead to not have income coming in for 3 months. So we created a product that basically was a savings account that would pay them out their salary. They would divide it over 12 months. Comes in at 9, but then it pays them back out as though they got it over 12 months. And that would allow them to help have consistent income, through the course of the summer when maybe, they didn't plan for that and they had an expense that they couldn't cover because, oops, I didn't think to save or set some of this aside because it was coming in earlier in the year. So, that's an example of an employer working with us as a credit union to help take care of their employees and identify an issue their employees were having with their finances. A lot of what we also do as with all those members, and then we also have significant employer group population as well, where we go into the businesses that and talk to their teams as they do onboarding. We provide financial literacy, financial wellness. We offer them, we of course want them to become members, so we go in and we talk to them about membership, but we also really focus on the education and hope that they connect the dots really and want to open an account with us because they got value. We're not just providing account and member, we provide it to everyone at those employers as well, and then they have the opportunity to open an account after the fact. So we are working with the employers that are in our employer group base, that we are able to provide their employees with these financial education services. And that's one of the main reasons employers like to work with credit unions, and they truly offer the credit union membership as a benefit to their employees as part of a benefit package is really kind of what it comes down to. There are a few companies that we also work with in our investment portfolio and have partnered with at the credit union as well. One of them is a company called Pocket Nest. They have this suite of 10 themes that they work in, and it's kind of, again, that kind of different life stage. It's how do you get out of debt? How do you budget? Prepare for retirement, send your kid to college, their insurance, estate planning, all kinds of different things. But their main target originally was to find different employers, not just credit unions, but all employers, and offer an employee financial wellness solution to those employers that was kind of custom labeled their employer's branding. Here you go, you come in and work through this. We actually took that and helped Pocket Nest shift that to also be member focused and be kind of a member facing app. But we still offer that to our employees as well, kind of in that realm, as well as, again, an employee benefit. Here's an opportunity to learn more about your finances, and really, at all levels, and understanding and maturity of financial literacy, access, education. Here's an opportunity to learn more and have an ability to have more control and empowerment on how you interact with your own money.
I appreciate all that, and I actually really like that you frame in this example credit union membership as an employee benefit. That's pretty consistent with the way we we see it. And one thing we've observed is that the mere choice of what, let's call them financial benefits, an employer chooses to offer is a reflection of their priorities around equity, their priorities
Hmm.
around their frontline, if we want to use that phrase, or hourly or less well-paid workers. And I heard you talk, for example, about the need to have small dollar loans or to advance a paycheck.
Hmm.
That's just a concrete example of recognizing and prioritizing solving for that need as an employer can have an enormous impact on workers who, quite frankly, may not even be eligible for or be in a position to take up some of the more traditional benefits. So I really appreciate that coming up in the conversation. Ben, I wanted to go back to something that you brought up or came up in your earlier response, which is this idea that the traditional milestones in our financial journeys are evolving. And I wondered if we could get you to share what you're seeing, especially for those younger members coming up, if it's not the kind of get married, buy a car, buy a house, or some version of that in some sequence, all perhaps by the age of 30. I don't know if that ever really existed, but it
Right.
doesn't feel like it's the majority experience today. What are the new milestones that you see coming up that are really defining, new consumers, new people, new households, financial experiences?
I think a lot of it is because they've been watching TikTok and said, "Hey, I got rich doing this," or "Hey, you should do this," and they really do believe in and follow the influencers they see on TikTok, Instagram, any other of the services that I'm less aware of. But you know, and they may be good advice, they may not be great advice. And that's where they're getting their information from. So there's an opportunity for financial education to be more formally done in those channels. But I think it really came to a head at the beginning of this calendar, at the beginning of 2023, when we saw Silicon Valley Bank, really draw attention to the advantage of the FDIC, deposit insurance, or the NCUA in the credit union case. Oh, my funds are actually insured if they're at a credit union or at a bank up to a certain amount. Well, what happens if my Cash App, goes? Well, there's no recovering that. I think people also have had frustrating moments where they've sent money to the wrong person, to someone else, a scam. That money is not recoverable once it leaves. So I think kind of the early experiences people are having are not with financial institutions necessarily. They're with a way to make money move between themselves and other people, and then they're getting loans not through the ways we think of in credit cards and cars and houses, but through buy now pay later is kind of the first interaction with all of this stuff. And then maybe they figure out later they need to do it, and they're also figuring out, oh, I need to invest, but they're investing through these apps that may or may not be helping them understand what to do. So.
Yeah, there's a lot there I really appreciate. Just listening to you and thinking about my own role as a parent and my kids' financial lives. It's completely true that they are brought into the financial system no longer through the kind of front door of a traditional
Hmm.
depository, but when somebody Venmos them money or when
Hmm.
they're
Yep.
consumers. So that's a interesting challenge for traditional institutions, and I hear your point about there being consumer protections and maybe something about having a fuller view of a consumer's wallet and financial lives that is a necessary condition to be really focused on outcomes for that consumer instead of delivering or perhaps promoting a point solution. Just to shove some words in your mouth a little
Yeah.
bit
No,
there.
that's a good summary.
I want to shift gears a little bit. This has, in some ways, been the year of generative AI. And given your role, Ben, I'm sure that this is coming up both in the credit union and in Reseda. And I'm curious to know what your reflections are about both the state of play and the potential looking ahead. And to the extent you feel there's hype that's hot air, it would be helpful to hear that too.
Absolutely. So, like you said, end of the year, so on my Alexa here with the screen, the word of the day, or the word of the year for 2023 is hallucinate. Not because we're all hallucinating, but because ChatGPT does this when, that's a term for those who are not familiar. When the generative AI goes off the walls and gives weird answers, it's because it's hallucinating. So, that's the word that has resonated with apparently enough people that it became the word of the year for 2023. So just a fun fact, saw that this morning. But anyway, so yeah, so generative AI, there has been a lot of hype, but it's rightfully so. I think the hype. I think it's interesting. I think if you talk to technologists, they're the ones who get very excited, and a lot of them are so deep into how exciting the tech is They don't know how to explain to anyone else how to use it or what to do with it. And they know how to use it, but what to do with it, I think is what's missing. And I think we're starting to see that come out more towards the back half of the year, where people are starting to get their heads around it, starting to figure out, well, how do I actually use this? I think a lot of credit unions, at least in the circles I talk to, immediately were like, oh no, let's shut off ChatGPT, let's block everything. I'm sure banks, a lot of companies did this as well. We don't want our employees sending all our proprietary information out the door. You know, OpenAI is an open system. So all that stuff as it's going back, you know, in to get trained and build the models that you're trying to work with it is getting put in logs elsewhere that could be mined for whatever. Probably not happening, but it could. You know, so if you're trying to protect, you know, medical information, financial information, personal identifiable information, you're not going to want to touch it. So so ChatGPT at its core, that's what it's doing. So a lot of credit unions. So we in particular created an AI governance committee to start to understand, you know, how do we protect the data around this? How do we protect our member information? How do we protect our employee, you know, records and all that stuff? But a lot of it is how do you apply what we already have in place? We personally, again, so we're going to leverage it in our conversational AI to improve the experience there. We partner with a company called Boost AI that actually was on the forefront and actually kind of brought it to us at the end of last year. It's like, hey, we want to experiment with this generative AI thing. And we're like, what are you talking about? You know, like, you know, ChatGPT. And we're like, what's that? So, you know, it really, you know, in the past 12, you'd be like, oh, I know what that is now. But, you know, this time last year, you're probably like, many people didn't know what it was. So they're bringing it forward. Hey, do you want to try this? You know, we're going to point it at your website. So basically what they're able to do is instead of leaving it open to all the data in the world, it's just trained on our data sets that we want included. So, you know, for our conversational AI for our members, it looks at our website, and let's say we're adding stuff there. It can then go crawl and find stuff and understand what we've added. And then where it would say, hey, sorry, I can't answer that for you to our member, it now says, hey, and this is where the hallucination comes in, and we want to be careful. You know, we don't want it to just make something up and give them an answer like, oh, how do I get a loan? And it's like, oh, well, you just take the loan out the door and we don't charge you for it. If it said that, we'd, you know, probably be in trouble, you know, or lose a lot of money. So what we wanted to do is say, hey, here's some things I found about applying for a loan. You know, here's some stuff. Here's where you can go look at the information and really use it as an opportunity. And the company was calling it quote mode, where basically it's like it finds the information just like a Google search and says, hey, I found this for you. You know, or like kind of the did you mean kind of a, as you're thinking of like a search engine, like the did you mean kind of a query. And then you're able to then find what you're doing. We're going to apply it both to our member chatbot and then also our employee chatbot as well. Again, some great employee use cases I've heard are again to those procedural manuals. So you could train the model on just your procedural documents. And then, you know, all these queries that go to HR, oh, you know, I want to take 3 weeks off at the end of the year. You know, how do I do that? Well, it could just read the policy manual and then it can give you an answer based on that, you know, or, you know, I need to take a sick leave. How does that work? Or think of whatever HR question you had lately. You know, instead of having to call up your HR person, you may not want to do that because some things may be sensitive that you, even though that's what, you know, the company is there for, there's still people telling someone else that you work with, hey, I have this thing going on in my life. If you could go find that information without having to tell someone, you may be more likely to reach out and find help. So it's an opportunity to do that as well. And again, rather than having to train everything and do this manually, generative AI and the large language models trained in the right way with the right boundaries are able to do that almost instantaneously. You know, it's some great stuff. And another cool one is, you know, this comes up when you're going to renew contracts. You know, hey, when does this contract expire, or what was this clause here? You can feed all your contracts for all your vendors into ChatGPT, and then it'll be like, instead of having to ask your legal department, or if you have outside counsel, you know, at whatever their hourly rate is, you say, you know, hey, when does this expire, versus a 2-week turnaround to get the answer to that. You can just type it in, it'll just spit it out to you, and then you can make some decisions from there. But, you know, I think there's some interesting things that you can do with your own internal stuff that can really help, again, improve the lives of employees.
I want to close with this, Ben, briefly, and I appreciate this big question, but it's no secret that the credit union industry has been consolidating, that financial services is very competitive. We talked briefly about the unique power and role of credit unions in your crystal ball and through the lens of technology as appropriate. Can you just give us something about what you see or what you hope for the future of credit unions?
Yeah, so I think we're at an interesting time for credit unions in particular, especially the smaller ones that, I met someone earlier this year that worked for a $5 million asset size credit union, and I thought she said it wrong. But she, I was like, but the event just happened to be in her town, and she worked for the Postal Employees Credit Union of that town. And I was like, wow, how are you, and when they have a three payroll month, like we have twice a year usually, they actually go below their regulatory limits for capital, and then they recover the next month. So there are things that being a small size that are really limiting, the ability for credit unions to continue in this current environment of technology. It's not affordable. There's a lot of regulations that are involved, and all the compliance that goes along with it has really led to the consolidation we've seen. A couple of years ago, I would tell everyone, "Oh, there's 5,500 credit unions." Now, then it was 5,000. I think it's either 4,500 or 4,000 that we're down to at this point. And it's not trending upwards. It's going to continue to fall. We're not creating new credit unions, so we're just going to continue to see this consolidation. And I do think largely driven by the need to be able to leverage larger and larger technologies. And if you're not able to do it, then it's going to be hard. And I think another thing that's unique to the credit union space, a lot of these credit unions have had a CEO that has been like the one leader, manager, whoever, who did it all for 30 years, and now they're ready to retire. And rather than trying to find someone to replace them and be that person, they're finding a credit union that's of a good fit, that can still take care of their members and do all the things that need to happen when they retire. So that's really their succession plan. So, I see the consolidation happening, I think largely driven to the tech. We may also start to see some of the bigger credit unions merge together to kind of be, again, taking advantage of that size and scale.
And thank you. That is fantastic.
Sure.
And I'm struck by the echoes between the changes in customers' experience and the changes of the sort of generational change of leadership in credit unions. Both are evolving, and the next paradigm is coming into view. It's been such a pleasure to chat. I appreciate you making the time, and look forward to this conversation. Thank you.
Sounds great. Yeah, thank you.